Alright guys, I'm probably just going to give it a go now. This is the first SAC. And it is 50 marks, 8 questions. We have about 60 minutes writing and 10 minutes reading. So I'm not going to do the reading time obviously. So let's go. Question 1. It is the debit and credit table. Fill in the following table with debit and credit. Okay, so this is like the basics of accounting, and I think everything in accounting comes from this concept, which is this debit and credit table. So in class, we learned an acronym. I don't know if you guys learned the same acronym, but this is what I learned, which was DELA, right? And for this, I usually split it down the middle, and it is whenever drawings, expenses, and assets increase, it's going to be a debit on this side. So whenever these guys increase, it's going to be a debit. And when they decrease, it'll be a credit. But here on the other side, which is liabilities, expenses, and revenue, which is when these guys increase, it'll in fact be a credit. And when these guys decrease, it'll be a debit. So this is like the simple way of remembering it. There is a much more complicated reasoning of why it is what it is, but for now, for the first SAC, I think it's just really important to get this. And as you keep going, you'll understand the more complicated parts to it. So let's just quickly fill this in. Drawings, increase, use the table. So that's quickly debit. I'm just going to use DR as like a shortened version. Liabilities, increase, that is going to be credit. Revenues, that is credit. Expenses, whoops, my bad, not there. Expenses is actually going to be a debit when it increases. Assets also debit. Owner's equity, which is just the equity part here, is going to be a credit. And then if you really want to just be fast with this question, you just kind of do the opposite way. And yeah, there we go. So first question, it's like quite easy marks. So you should probably get this really quickly. What is the cost price? Okay, markup calculations first. I should first read that part. What is the cost price of an item which has a GST exclusive selling price of $200, assuming a 150% markup? Just give me a second to process that. It's been a while since I've done accounting, I guess. Okay, so they're asking us to find the cost price, right? And they've given us the selling price, which is 200. Here we simply apply the formula, which is cost price equals selling price over 100% plus X percentage, okay? And we're gonna call X, let X equal markup, right? So this is a really simple way of doing it if you really don't want to use your brain much, and just follow a formula. So, whoops, sorry, still getting the hang of this stupid thing on the stylus on my laptop. Cost price equals 200 divided by 250%, which is simply 200 divided by 2.5, which is, if I'm not mistaken, $80. So there you go. So that is the cost price of an item of 80, which when marked up by 150% takes it to the selling price of $200. So what is the GST exclusive selling price of an item, which has a cost price? So again, here we want the selling price. This part is the unknown, and we already know the cost price is 70. So here we use another formula, which is this inverted. When you rearrange this formula, you know that selling price equals cost price. Oops, I'm so bad at this, guys. Sorry. It'll take me a couple times. I'll get there eventually, I guess. So selling price is cost price times 100% plus markup percentage. There you go. Which is gonna be, which is the cost price is 70 multiplied by, here the markup is 170%. Right, yep. I'm not throwing anything, yep, this is all good. Because it's, right, actually, let's just make this a little clear quickly. I don't want to confuse you guys, it's just a 70% markup from here. Maybe better to write it this way. I know this doesn't really make much mathematical sense, but essentially just means 100 times 170%, which is just 70 times 1.7, which is also simply equal to $119. There you go. So that shouldn't be too shabby. Right, we can move on to the next question. It's just these formulas that are really important for these sort of questions. Once you guys understand these formulas, and another intuitive way of thinking about these things is usually cost price is before the has been, so this is what the business will purchase it at. Selling price is what they're selling it at. So obviously usually the business will want to make a profit, which is logical. So they're simply going to want to increase it by a certain percentage, which is the markup, to get it to that selling price. So usually selling price is higher than cost price. So you can usually check it by seeing if your cost price is lower than your selling price. That's how you can usually check your answers. And here for us, the selling price has always been higher, so which is good. So we can probably move on now. What is the GST component? Whoops, sorry. What is the GST component? So the GST component chargeable by a business to its customer for an item with a GST exclusive selling price of $110. So the GST is always 10%, right? Okay, so if this item is $110, right? This is exclusive of the GST already, so 110 multiplied by 0.1, because that's 10%, gives us $11, and this is the GST part. Or better, I should in fact say the GST component. Alright, so that should be good. And if they told us to, here the question obviously only asks for the GST component, but if it asks us what is the selling price including GST, then you simply do the 110 from earlier plus the $11 to give you $121. Sorry, my writing's horrendous, but here this is the part they're asking for. So that should be fine. I can't even draw a star properly, but that's life. What is the GST component payable by a business to its supplier for an item with a GST inclusive purchase price of $132? So here obviously inclusive, very important to catch on to. So we get rid of that GST first. Okay, so the actual price of the product, because it already includes the GST inside this, so we know the product is X and there's 10% of that with it, which is giving me $132, right? Without GST equals trick is you can just divide this by, divide by 1.1. This is going to give me the price of the product without GST, and then to find the GST component, I simply go 120 multiplied by 0.1, which is not, and that should be it. So that's a little trickier just because it says inclusive compared to that one which said exclusive. That's the only trick with this question. In general, do business. Okay, this is more of a theory question. Little tip, guys. For accounting, it's really important, that theory question, because for me at least, practical wasn't the hard part. It was theory that was more trickier. So for theory, it's really good from the first SAC onwards, all the theory questions, because in accounting, they're quite repeatable. You want to start already creating like a theory bank for the end of the exam, because that's your end goal. Because if you really want above 40 in accounting, or even like high 30s, if that's what your goal is, each person has their own goals, you really want to be able to get these theory questions right, because they're pretty repetitive and they're quite similar. So this could be a question also on your end of the exam. So, but this is quite an interesting question, because it says, in general, do businesses generally prefer their GST clearing account to have a debit or a credit balance before the end of period settlement to refund by the ATO? Justify your answer. Okay, so for this question, I would say ideally, obviously I won't write in dot points, but you guys, just to make it more clear to you guys, I'm just going to write in dot points, straight to point, but you guys have to put it in sentences. Ideally, a business would, oops, what is going on here? I'm really struggling with this new status thing, but it will do. Would like their GST account to be a debit. This is because GST clearing, I should say actually, this is because the ATO is required to make them a refund, which is a GST refund, right? So logically this makes sense, because who doesn't want to be returned money, right? So if they're, because then the GST is actually an asset when it's GST clearing account when it's debited. So that means the ATO owe you money instead of you owing the ATO, right? So for this reason, the GST will become a current asset. So you would be actually, the ATO will be required to pay you money. So who wouldn't want that in that situation? But obviously, there's a counter side to this, which is also important. And this is probably, I'm just kind of just writing the ideas, and you guys are gonna have to like put it into what English properly. But this is like 1 point to get 1 mark, and then the second mark is for the idea that no, maybe let's just word this as, but this would also mean that business not performing well, because to have this is because when a business has a debit balance for the GST clearing account, that means they have more purchases than sales, which is not good, right? Because business is looking to make money. So how do you make money? You have to have more sales than purchases. So not even more, like more in amount. So if I buy $6,000 worth of inventory, I want to have sold it for at least 8,000. If I'm only selling it for 4,000, I'm gonna have lesser GST collected from the sales and more paid off to the ATO, like to my suppliers and everything. So from that perspective, I will gain money, but overall my business is not performing well. So from this perspective, I'd actually want to have a credit balance, because even though we are required to pay ATO, this still means business performing well as sales greater than purchases. I don't know if I explained that well enough, but that's like the idea behind it. So you've got to overall come to the conclusion. I think that it would be better to have a credit balance, because yes, gaining that little money from the ATO would be nice, but that also means that you're suffering as a business because you're purchasing more stuff and not able to sell it off, which is not good. So overall, we want to conclude that it would be better to have a credit balance. Like, this is a really thinking-oriented question. Like, this is not what I would expect the exam to have, but this is actually quite a challenging question, I would say. So that is that question. Okay, so let's move on to this question. And for these questions, really important to highlight. So AT Academy, let's just write this down as the business. I like doing this to make it clear, and there's a lot of businesses said in this, that we are like whose perspective we have, and perspective is everything in accounting. Is a leading accounting education provider in Southeast Melbourne. Record the following transactions in the General Journal and the books of AT Academy. So, and obviously, whenever you see narrations, just make a little asterisk so you remember that you have to check at this part of the question carefully. And here it says narrations are not required, so we're chilling there. But it's a really dumb way to lose marks on the exam or in your SACs, because accounting, even your SACs matter a lot if you want to get a high score, because it's relatively easy subject, so you want to make sure you don't lose marks on stupid things like narrations. So we're taking, this is from AT Academy perspective. All right, looks good. All right. On the 1st of 12th, 2021, the business purchased a Samsung Galaxy Note 20 from JBI5. So just maybe just underline the, maybe we can just highlight the date. Samsung Galaxy Note from JBI5 for 1210, including GST, including including GST. The owner uses the phone for business use 40% of the time and personal use 60% of the time. And in my time, when I did this SAC, actually, I got this question wrong. And because this is quite a tricky question, I would say. But once you get the hang of this question, it just starts to make sense. It's because it's not like a typical exam, not exam, like SAC question, or some not as simple as a bit harder than your workbook questions, because workbook questions are quite straightforward. So let's break this down. The business purchases Samsung Galaxy Note. So the business purchased an asset. Purchased an asset with cash. The owner uses a phone for business use only 40% of the time, right? So that's not, but 60% of the time it's being used for personal use. Okay, so what I would do here is, first things first, for the general journal, I probably want to, write the date. I wouldn't care too much about 21. Yeah, you can write it if you don't want. It's already there, 2021 at the top, so don't stress about anything like that. So I'm gonna put because our business's asset has increased, which is the phone, Samsung Galaxy, if you want to make it clear. So this is the asset which is being debited, and that is actually gonna be 1210 divided by 1.1 because it's including the GST, which was gonna be dollar. One second, I actually think I need a calculator. I'm sorry, I'm stupid. I think that's 1100. Yeah, I don't want to trust my maths because even though I've done high level maths, no one likes to do unnecessary calculations because that's the way you lose marks usually. Give me a second, guys. Calculator. Yeah, I just want to make sure. Yeah, I'm right. 1100. Didn't need to do that, but that's okay. Yep. But it's only being used 40% of the time by the business. That's really important to realize. So we're just going to do 1100 times 0.4 to then give us 440. So this is the actual part of the business's asset, because it's the rest of the time it's said it's being used by the owner, right? But it's being used by the it's been paid by the business's cash. So we have actually only benefited 440 from that. Okay, now the GST clearing is going to be 44, 10%. And here's a trickier part. Drawings is going to be, whoops, why have I indented it? I put it as credit. That is not right. It's being debited because drawings is increased, and that's written as a debit because we have essentially paid for this phone, and the business is paid for this phone, but the owner's using it, so it's consuming the business's assets, which is simply drawings. So we're gonna put drawings here, which is gonna be 60% of the times. I can calculate that, but there's probably a faster way to do it, which is because I know. Whoa, calm down, mate. Calm down. What's just happened there? Sorry, guys. Faster way to do this. Bank, which I know is going to include the GST because when you pay it, when they paid it, 80, when they paid this, it was 1210 multiplied by, no, that included the GST already, so we can just write this down. And the smart way to probably do this question is we can just fill in the blanks because debit always got to be equal to credit. So 1210 minus 440 minus 44, just 726. This is probably a smart way to do it, but if you guys do the 60% way and then include the GST and everything, I'm sorry, you don't need to put GST, do you? Wait 1 second. 1210 minus 440 minus 44, 726, and yeah, that's about right. And it's also including the GST that the owner is going to consume in it. Right, so that is 726. So the owners consume $726 off that phone through that. This is quite a tricky question, guys. If it takes you some time, maybe just break it down a couple times. My pen has decided to lag out now. Okay, that's better. That's the second part now. Let's go back to the question. AT Academy paid $55 including GST for MYOB accounting software's monthly subscription. Okay, so they paid for MYOB accounting software's monthly software. Alright, okay. So I'm gonna say 80, wait, what am I doing? I'm actually gonna say, oops, sorry, MYOB accounting software which is actually a prepaid expense, because after the year, because it's a monthly subscription, sorry, after the month, it's going to be consumed, right? But it's, I don't know if you guys have learned this yet. This is probably an advanced question. This is probably more for the exam. So maybe, because you guys probably haven't learned prepaid expenses yet, which will be more of a when balance sheet adjustments comes in. But yeah, it's pretty much prepaid expense is an asset. So when it increases here, it's going to be debited. So we're going to put 50 and then GST clearing is 5 because we purchased this, and it's going to be debited, and with bank 55 because I think we've paid this by cash. Yep, I'm assuming this paid by cash. Yep. Oh good, yeah, that's quite tricky, I would say. That question's quite tricky. I think this part, the prepaid part of this, you can probably have a look at by yourself. More when you come back from Unit 4, it'll probably make much more sense. It's not a harder concept, it's just once you have been introduced to this concept of prepaid expense. But yeah, the first part is quite tricky. It'll take you some time to get that, so maybe just read the question, highlight it, little things like that will help you on your way. Okay, more theory. We love theory, because theory is quite free if you know what you're doing. See, really important to know what you're doing here. 1 second, I'm just trying to get the heading up. Okay, let's go. 4 times 3, so there's going to be quite a bit of theory marks here. Okay, classify how each of the following accounts meet the definition of one of the accounting elements. Alright, so what are the elements? Let's just write them down here. Assets, liabilities, maybe even breaking them down to current and non-current. Current, non-current. Revenues, expenses. I think that's it, right? Am I missing anything? No, I don't think so. Okay. These are my elements, so let's break it down. So sales. I just need to show that it meets the definition, right? That's the important part. That's the question. The question's asking. I need to show that it meets the definition. So very important to know the definitions of all these guys. Like it should almost be memorized by heart, to the extent that if I wake you guys up in the middle of the night, you should be able to spit out the definitions. And it's not that it's like you should still understand them obviously to an intuitive level, because I think if you understand to an intuitive level, you'll never forget it. So you should be able, but like it's also supposed to be quick by heart, just to help you save time. So we can start with sales. So sales is a revenue, right? Because, and it's really important to so we know that sales is a revenue, but we need to show that it matches the definition of revenue. So show that it matches definition of revenue, right? So the definition of revenue, this is really key. Definition of rev is, okay, actually, maybe let me just double in this to make this clear, because if you follow these simple steps, you should be able to get this easily. Maybe let's just make it clear. Okay, definition of revenue. First thing which you guys should understand, it's an inflow of economic benefit. Second thing, it increases assets or decreases liabilities, leading to increase in OE. Third, That's capital contribution. Sorry, my writing's getting kind of shitty now, but hopefully you guys can still understand that, and I'll try to be more slow and clear. Don't want this video to go for ages, so I'm just gonna try to get through this part quickly now. Okay, so, but this is not enough. Like, knowing this is great, right? This is good, but you need to link this to the definition of sales, right? So we need to say, so I'm not going to write this out fully, but you guys should get an idea. Sales increases, maybe I should just put the arrow because I can't give assets in form of bank or accounts receivable, right? Which leads to increasing OE, right? This is like us showing an understanding on how it increases the assets, blah, blah. And it's clearly not a capital contribution. The keyword is inflow of economic benefit. This is a keyword, so it's probably nice to just say it somewhere in your answer. So yeah, that's probably something like that would be nice. Next one. Yeah, but like this linking is really important because anyone can just spit these definitions out. You also need to understand that this kind of shows understanding, because we don't want the memorized people to get 50 wrong. We want to memorize people don't get 50 wrong, right? That's why. So we want to show our understanding, and that's how we show it. GST clearing debit balance. Okay, so the debit balance is obviously a current asset, right? Because a liability, when it is debited, no, what am I saying? Sorry. When a liability is increased, yeah, so GST clearing is when it's credited, it's a liability, and when it's debited, it's an asset. Like, just make sure you guys understand that. I don't know what I was saying there. I just kind of had a brain hemorrhage there. Just don't mind me there. Just clearing debit. Okay, so it's a very important current asset because we're going to be paid this within 12 months, right? So we need to spit out the definition of an asset, which again, you guys should know this, memorize. I'm going to make it quick, like pretty straightforward, so you guys can like remember this if you don't know it, which is some keywords. Present economic resource. What is that too? Controlled by entity. That's another key thing to say in your answer. Some past event and generates, or it says which causes future economic benefit to the business, or like to the entity. So like these are 3 things you want to tick up. So, and here obviously it's within 12 months because it's a current asset. So now we link this to the definition. So I would kind of start this answer saying GST clearing would be classified as a current asset as it is a present economic resource controlled by the entity due to a result of past events. And then here you show your understanding. Due to result of past events of business making more purchases and sales, which is probably what's going to cause the debit GST clearing. Right, something like that. Just to show you understanding. Blah, blah, blah. Right, so that's one way to show somebody understanding. Some more understanding you can show and link the definition further, which causes future economic benefit through what form, right? So we can say causes future economic benefit in the form of maybe, stop, why is he glitching? Sorry. Pen was lagging for a second there. In the form of cash coming into the business when paid by the ATO within 12 months. So something like that should do the job. Right, you kind of just want to show you answers something like that. And it's long, but just like, you don't need to say the 3 points in like a line. You just want to, each thing should be showing its understanding. So quick, I'm just going to go through this again. I know I'm taking my time, just hope it's really important to get this in your head. So GST clearing debit balance is a current asset. It's a present economic resource controlled by the entity due to past events of business making more purchases than sales. It's controlled by the entity. I said that. This will further cause future economic benefit in the form of cash coming into the business when paid by the ATO within 12 months. And within 12 months is crucial. This essentially is a hallmark. And you can't believe the number of people that will forget this. Because that's how you show it within 12 months is it's a current asset. More than 12 months is not current asset. So you kind of just want to show that. Yeah, I just kind of took my time with that. Not the best, but we'll do. So this one, I'm just going to go through it quickly. Wages, it's an expense. And if you guys don't know the definition of expense, we kind of just want to run through it quickly. Outflow of economic benefit. Say that somewhere in your answer. Right? Oops, I can't fit that in, which is unfortunate. So, might just, sorry for the late zoom in. Benefit. Yep. Number 2, it decreases assets or increases liabilities, leading to decrease OE. Right, that's another important thing. And then we also say not drawing. So the only real link, because these two just, you need to state these two somewhere in your answer. Just kind of just state these. And then, sorry, my S looks like it's having a seizure. Right, we just want to state 1 and 3. We kind of want to link here to say what exactly is the thing, because some expenses, the liability will increase, some will decrease. So in wages, we kind of just say wages will decrease bank, and so decreases when business pays off its employees. Something like that should do. Right? Right, cash at bank. Alright, so some of that, just link it to the three things in the definition. Get them all. It's more straightforward, these ones. Expense and revenue, it's just the definition. You just need to know your 3 points. Link it in, especially in the second point, even for the top one. Link it in. Right, cash at bank credit. So, cash at bank credit is actually a better terminology for this, which you will learn later. It's probably called bank overdraft, right? Which is a good way to use in your other theory responses if it ever comes about. This is a current liability. So, for liability, we should know our definition as well. So, definition for liability is, and I can't write as usual. First one is, it is to say this key points, present obligation of entity. Again, it's always due to some past event that causes this. And then this is an important one. Does leading business that is horrific actually, right? Does leading business to transfer economic, I'm just gonna be lazy about echo, within 12 months to settle debt. Like, within 12 months is important to show that this is a current liability and not non-current, right? Does leading business, so again the keywords here, does leading business to transfer economic resource within 12 months. Due to some past events, so you could also link this by saying too many unnecessary purchases. Something, I don't know. Just to show you how to say. And not just spit out to memorize it French. You want to link your definition constantly to show you how to understand. So that's good, right? And we're done with those stupid questions. It took way too long. But we've finally gotten past those. Let's go. Roger Federer owns. Okay, accounting equation questions actually, yep, they're quite. Takes time to understand them, but once you get the hang of them, these are quite straightforward. Roger Federer owns and operates tennis clothing shop, right? And important to just highlight all this important information just to make it clear in your head that this is the owner, this is the business's name. On 1st July, let's highlight the key date. Federer contributed a Rolls Royce, so we can probably contributed a Rolls Royce. I'm just gonna vehicle. His business, tennis clothing shop, originally purchased on credit. So he originally purchased on credit from Nadal's luxury car warehouse, right? And that, my friends, is our supplier. The agreed value was $230,000. 1st July 2015. Okay, so purchase on credit, very important actually. Should not have missed that. Yep. I'm just going to circle on top of that. At the time of acquisition, the agreed value was $230,000, with $50,000 remaining on the loan, which the business was to pay off in $5,000 quarterly installments starting in 3 months' time. State the effect of this transaction on the accounting inquiries. My answer in full sentences. Okay. Okay, these questions, the smartest way, which I do these questions, but to state the effect, it's probably nice to just draw yourself a little table. I've seen Evan do so many of these. Right, so how I kind of just think about these is the impact on each of the things caused by this transaction. So he's contributed. So the fair value was 1. This is the fair value. Okay, so this will increase Rolls-Royce, the vehicle, for the business by $230,000. But the business takes on the remaining loan, so their liabilities will also increase as the loan increases by $50,000, right? And probably a nice little breakdown is where the tricky stuff comes in, because it says the business was to pay off in 5,000 quarterly installments starting in 3 months' time. So there's to start the pays off in 3 months' time. Okay, so in 3 months' time, so 3 months goes by, and then you have 3 more installments until the end of the year. So that's $15,000. So $15,000 would be current liability, and the rest would be considered as a non-current liability. So they don't need to pay up until them after 2 months. So that's a nice little breakdown I've done there. And now finally, it's an increase in capital contribution by $180,000. And then just to check if I've gotten it right, I'm just kind of gonna add them along, which is pretty good, I guess. If it adds up, you should know you're right. That is $50,000, and that's $180,000, and it does match up because 180,000 plus 50,000 equals 230,000, which is assets equal to performance equity. So your overall equation is balanced, and you kind of just put this into words. So I'm not gonna write it down. I'm probably just gonna say it out to you. So I would probably write something like the effect of this transaction on the accounting equation was that assets increased by $230,000 due to an increase in vehicle Rolls-Royce by $230,000. Furthermore, this also had an impact on liabilities by $50,000 because $15,000 increase in $15,000 of the current liability of loans, and $35,000 of the loan non-current liability. Additionally, owner's equity also increased by $180,000 as an impact of a capital contribution. Something like that. Put it into words, because it's saying in full sentences. Because obviously my answer doesn't work, but this is a process. You kind of just, I would say, do this for every single one of this question, breaking down, because this is easy marks. Like, you choose a table, you just write it and put into words. You can do it directly as well. I just think the table really helps. So you kind of just go with that. So then state the effect of the accounting equation if the transaction was not recorded. And here you just kind of need to know the terminology. So the keywords for these questions, which says not recorded, these are called omitted transactions. So in your answer, we want to use the terminology, actually, a little bit better one. Is understated and overstated, right? This is because that's well, this is the terminology you want to use. So the impact of this not happening was that it understated this or overstated this. So because the transaction occurred and we didn't do it, what was the impact on the reports and on the businesses over equation? Okay, so you can essentially just use the same table if you just follow this table, right? And if you had an increase on the table, you can pretty much sub it in for understated in the words. That's kind of weird the way I've done this. But I think you guys should understand understated is usually an increase with an arrow. Overstated would be a decrease. So if I have to just say in words, because I'm taking way too long with this. If this transaction was omitted, assets would be understated by $230,000, as Rolls Royce was understated by $230,000. The vehicle Rolls Royce was understated by $230,000. Yep, that's right. And then you kind of just say liabilities was also understated by $50,000 due to $15,000 of current liability being understated and $35,000 of non-current liability of both loans being understated. And capital contribution also was also understated, therefore make something just probably just put into words. And just repeating whatever you just put in here. And this is probably like a quick trick, because sometimes you can get confused. I know it's kind of stupid, because when something increases and you didn't put it in, it's been put lesser than it actually is. Like, sometimes to think about it intuitively makes sense. Overstated is it's being put higher than it actually is, because we've not put in the decrease, so that's when it's overstated. So whenever you see if you put an increase arrow, you can just probably put understated in the wordings, and overstated here. Everything is pretty much the same. You just kind of just sub these words in. Instead of increase and decrease, you can kind of just sub these in. That kind of gets you there. With this question, Abinada. Is my owner. Ooh, my pen has chosen to lag out at me. Brilliant. Again, actually, it's brilliant. Cricket Clothing Shop is my business. Perpetual inventory system for recording inventory. Don't worry about the whole perpetual inventory system for now. Just kind of just go with the question. Credit sale of inventory of 100 cricket balls, $22 each, inclusive of GST. Alright, important to catch credit there. 100 each and inclusive of GST. Kind of the keywords, all of them can make you cause mistakes. Cost price of each cricket ball was $10 exclusive GST. State the effect of the transaction on the accounting equation. Okay, kind of again, I'm just going to do these tables because after that you guys just got to put into the words. I think these tables kind of just sum it up brilliantly. What you actually have to do. So cause this thing was a credit sale, so accounts receivable will increase. We see 100 times 22 because accounts receivable includes the GST, so we kind of just increase accounts receivable by $2,200, right? Then inventory will drop by 100 times 10, which is 1,000, because now the inventory you have, you've sold it, given it to a customer. Credit accounts receivable I put as a credit, but not actually paid by cash, right? GST is going to increase because it's we have taken the GST from the customer. Now it's our duty to pay and give it back to the ATO. So we have a liability to transfer that money to the ATO of again, I made the same GST clearing. I'm just gonna put it down here, maybe $200, something like that, right? And then owner's equity is obviously the sales. Sales is revenue is not including GST, right? You can say sales rev, you can say it's just sales, doesn't really matter. $2,000 because it's just a selling price, but the GST, which is 20 when you take out the GST times 100, which is 2,000. And then the cost of sales, here's a tricky part, right? Because cost of sales is an expense. And sales is revenue. You can say sales, I can just say sales because it's assumed to be revenue. Cost of sales is an expense which increases because the cost of the sales was $1,000, same as the inventory. Because the cost of these having these sales is we've lost the inventory, right? So that is 1,000 again. And cost of sales is an expense. So overall, this is actually supposed to be seen as like a negative thing to the owner's equity because cost of sales increasing is like an expense increasing. So when an expense increases, it's supposed to like have a negative impact. So 2,000 minus 1,000 should give us $1,000. This is kind of tricky. Think about it for the first time. The expense is increasing. So if the expense is increasing and your revenue is 2,000, it'll kind of just reduce the owner's equity impact because cost of sales is an expense. Even though it's increasing, you don't add them up. It's kind of because it's an expense, one is a revenue, they just have two different impacts on owner's equity. And this kind of just stays the same, and this opposite, one's going up, one's going down, so you can subtract these. Both are assets, so nothing's different there. You just subtract this off, and then again, good way to check, 1,000 plus 200 equals 700, so it makes sense. So this is kind of the way I would do these questions. Really important to do this though. Check it, it adds up. Put it into full sentences now. You can kind of just say that the impact of this accounting if this transaction was that accounts assets increased by $1,200 due to accounts receivable increasing by $2,200 and inventory decreasing by 1,000, and then just say the rest of them. GST decreases by 200 causing liability to decrease by 200, then just say the whole thing. But important to say increase, decrease impacts, and then talk about. Sometimes you can also say net profit, like in these questions. You also got to say the impact on net profit. Here the net profit impact is $1,000. same thing, we've already set this, state the effect on the accounting version of this transaction was not recorded. You kind of just use that same table and just sub it in for whenever it was increasing, you just say understated, and decrease, you just say understated. Use the same words and just kind of just finish the table. This is all fine. I'm going to leave that to you guys because I think I've spent more time on the actual understanding of how that table forms, and from there you just put it into words. That's good, and I know you guys are probably tired already now. It's 1 hour taken of this video, so I'm probably just going to quickly rush through now to go to the last question. General journal. We love general journals. Okay. Quote the following transaction in the general journal with narrations. I see you trying to trick me here. Like I said, always narrations, asterisk it so you know. In fact, what I like to do is, before, so I don't forget, I just write narrations and massive things here so I remember when I'm doing the question, because I'm going to have to use this. From the point of view of Raquel's vessels. Okay, so this is the perspective, right? It's crucial to understand. We're taking hint 2020 is a leap year and Feb has 20 days. Okay. Looks good. February 26, 2020, Raquel's vessels purchased 20 Panama boats, from supplier Martinez. That's our supplier. The price is 7,600 each. Under the credit terms. Okay, credit terms. Interesting. Well, interesting. Oh, what am I doing? Alright. So, she's purchased on the 26th of the 2nd. She's purchased. So 7,600 times 20, and then she increases by 152,000 GST clearing 15,200, and then accounts payable. I'm just going to write Marquina to make it clear, and that's 167200. Sorry, yep, there you go, 167. Sorry if that's not clear. 167200. Because she's bought the 20 Panama boats, right? So I just kind of write it like this. And your narrations don't really matter as long as you have one. Purchase 20 Panama boats on credit. Note this is on credit, so there's going to be credit terms. And then I'm just going to put in the source document because that's the most important part of that. Okay, next one now. 103, I think it was. March 1st, 2020, Angelique Rubio purchased 7 Panama boats from. Okay, so now this is Angelique Rubio purchasing. So now just think about this, the perspective have changed. So earlier, Raquel's vessels, we're thinking from Raquel's perspective. So earlier she purchased, right? Now someone's purchased from her. So now she's made a sale, right? So she's made a sale of 7 Panama boats. 13,200 each, including GST, so that's $1,200 each. Sorry, 12,000 each, exclusive no GST. Under the credit terms 2/14/60. Okay, we're gonna come to those later. But now let's just put in the accounts receivable entry, accounts receivable. Always includes GST. You guys should remember this. I'm just gonna put Angelique, which is gonna be. You guys could do 12,000 times 7 times 1.1, or the only goes 200 times 7, which I can just simply put as 92,400. Then credit transaction here. You guys should know your basic tables of these journals, like all sales entries are the same. It's 5 transactions we need to do. Now sales is going to be credited here by 84,000. And then GST clearing, because it's a sale, so GST is going to increase. I have to pay back to the increase by 8,400. I'm just imagining. So I need to divide by 1.1 to get your sales and then GST clearing. And then my cost of sales here. Expense is going to increase by, I think, sorry, I don't know what quite happened there. Sorry, I'm getting contact as well. Yeah, so 711, we know the cost price from earlier, 7,600, right? Yeah, 7,600, 53,200. I don't know what's quite going on here. Kind of lagging out a bit. Inventory, which is the same as cost of sales, but it's decreasing assets by 53,200. These are always the same. These two derive by dividing this by 1.1 to get this value, and this value times 0.1 to get this value. So you kind of just do it then. This is like a common table. Okay, I'm going to quickly speed through the narrations. So 7 Panama boats. Maybe I can just say on credit again, just to make it clear, maybe, I don't know. Invoice R23. So good, I'm remembering the invoices as I go along. Now, last 2 transactions, just keep ticking them out as you go. March 3rd, 2020, Raquel's Vessels repaid Marquina's Marinas for invoice 872, check number 37. Alright, okay, so this is from Raquel's Vessels perspective. So they're paying back their supplier. So this is paying back supplier. Right, and we know they were supposed to pay back the supplier 167,200. 167,200. But there is a discount offered, which is here, which is 3% if. A nice way to remember the thing is, it's 3/7 n/30. So you know n/30 means you have to pay at least within 30 days, right? So that means you can look at it, whatever's on the right hand side of the slash is always days, and the left one, that way you can remember is percentage. So 3% if paid within 7 days. And let's just quickly check, have they paid within 7 days? 27th, 28th, 29th. It's a leap year, so that's not good. 27th, 28th, 29th. No, 31, 2, 3. Yep. So it is within 7 days. Right, so we're good. So we do get a discount here, which we do. So discount granted. Right, that's kind of like how I will do it. So I'm just going to quickly speed through this one now. Accounts payable is going to decrease now because I'm kind of getting rid of my liability for paying it off. So accounts payable is going to decrease because I paid it off. 16200. Discount. So I've earned a discount here of 3%, which is from that number is 5,016, and then 3% of that number is 5,016, and I can just quickly subtract this. I'll take 97% to figure out the amount my bank has paid off. So how much they've paid in reality is that much. And quickly put in invoice 872 repayment from the earlier entry with discount. Check number 37. Something like that should do. I mean, your narration don't really matter as long as you have something written. I think they'll take a markup as long as you have a source document, something to summarize the payment. So summarize the transaction. And then your final one occurs on the 11th. Sorry guys, it's been going a bit long right now. Gonna try to wrap this up. March 11, 2020, Angelique Rubio repaid. Okay, so this, I'm just gonna go to a line. Bring this. Okay, so now Angelique Rubio has repaid us. So let's see if they've reached our credit terms. So there were some credit terms here as well when they're repaying us back. It's 2%. Sorry. % discount expense if money repaid to the business we're accounting for within 14 days. Right, so they have clearly done it within 14 days because Silicon Valley 1st, March 11th, that's about 10 days or something. So yeah, they've done it. So discount should be granted. Right, so let's quickly go on and take the third transaction and the fourth one. Let's kind of just speed through it and then we should be done. Okay, so it's probably for this one. Start with the accounts receivable because we know that's going to decrease fully because they've completely paid it off. That's just accounts receivable. I just found it. 92,400, so that decreases right there. Discount expense is here. The expense increases, and then bank is also increasing. Asset increases because money is coming to account because they're paying us back, but we're getting paid less than the actual discount because we're actually granted them a discount. And 90,552 is because 92,000 times 98%, which is that, and then discount expense can be figured out by 92,400 minus 90,552, or just 92,400, 2% multiplied by 0.02, so 2%, to give us 1848. That looks good. Almost done. Just wrap up the narrations. And now this is starting to break me because my laptop is low on charge as well, I think now. But we're gonna persevere through. Settlement of invoice R23. With discount granted or something, I don't know. Sorry guys, I know this is taking a bit of your time, but I think this is a good practice hack that I think is really important to go through. And we should be done. So there's that. So we have, let me just quickly check if we've done the whole question properly. I think that's that. So that should be the practice hack. So we finished it in 15 minutes more than the time, but we did not use reading time, so we've just gone 5 minutes over. And this is with me taking my time explaining my thought process while I go along. So this shouldn't be too bad to do under time conditions, but make sure you just give yourself time to check through and everything. And quite heavy on theory, I would say this one, less on the practical side, because I think the practical stuff we kind of sped through, which is really nice. The last stuff was probably the main practical component of this, which is worth about, I don't know how many marks, 12 marks, which we kind of ran through quickly, because the perspective is all that really matters here. Once you get the perspective, and then the credit terms is important to catch on to, and the rest is not too bad, I would say. Just remember dealer, remember to take your time with this, and yeah, the rest is fine. So that's the first practice I've done, guys, and I'll probably catch you in the next one now. So have a good one. Peace out.